Hey, what's up guys? John here. 39%. I didn't realize, I knew things were bad, but I didn't realize things were this bad. The more I connect the dots, the more I realize that, we are kind of standing on cliff's edge here in this economy. I'm not saying this to scare anyone, not being like a Debbie Downer or anything, but on this channel I talk about personal finance, real estate, business, and money. And I think we're stepping into an opportunity where a ton of money, I mean, like an unbelievable amount of money is going to be made over the next couple years. Regardless, whether we like it or we don't like it, this is what's happening. This will happen. And so you want to position yourself as best as possible. Even if you don't want to participate in it, you want to at least prevent someone from taking your wealth, right? And the easiest way to do that is to not have high interest consumer rate debt, not be in any type of adjustable rate debt, and to position yourself with fixed rate debt if you have to have debt at all. And so if you have high interest credit card debt, if you have a situation in which you want to try to get out of, but you can't because you have bad credit, we would love to help fix your credit to hopefully open the doors so you can then, maybe do a balance transfer, get out of high interest credit card debt, or maybe even invest in distressed real estate. The more I look into this also, it's great. Like they're tightening up lending standards. So like if you want to get a bank loan, you want to do any of that, if you have a 650 credit score, 700 credit score, a year ago, 2 years ago, that was fine. What I think is ultimately going to happen, the people that are going to get the loans are going to be people with 750s, like the top tier borrowers. Simply because as commercial real estate and things start to erode, which I'm going to talk about in this video, they're not going to want to take on additional risk. And if you have bad credit, you're viewed as high risk. So we'd love to help you fix your credit at GreatCreditFast.com. That's GreatCreditFast.com. Give us a call at 561-430-5900. Take a look at this. So 39% of Americans say that they've skipped meals to make housing payments. And 61% cite their financial situation as a stress point of their lives. Within inflation, sets at levels not seen in years, many Americans are saying that they're feeling financially stressed, and some are even saying they've skipped meals to stay afloat. Now the thing is, this is what they're going through now. What happens when inflation gets worse? Because it will get worse. And then they want to say they're going to combat inflation. They're not. It's going to get worse. And I'm going to show you exactly why and how that happens in a second. A growing number of surveys are painting a picture of this era of financial challenge. One of the latest from Clever Real Estate showed that people's personal financial situation was the most cited stressor in their lives, with 61% noting an issue. That puts it above stressors as mental health, cited 57% of respondents, physical health, 53%, relationships, 48%. And this is by a survey of 1,000 people. Perhaps even more significant, 39% of Americans say that they've skipped meals to afford their housing payments, according to Clever Real Estate. Among millennials, that figure rose to 44%. 44%. Matt Brannon, a data analyst and writer of Clever Real Estate, said that the story goes beyond inflation. It's also a surging price of housing and how wages haven't kept up with it. They go on to say that housing prices rose 160% since 2020. Meanwhile, wages have not kept pace. Now, Mark Zuckerberg actually came out yesterday saying that it is a moral crisis. A moral crisis, this is what he said, that he has top people at Facebook going to work overseas in other locations. Ideally, and I would bet, areas in which offer lower taxes and probably a cheaper cost of living. So he's paying top tier money here, those old Silicon Valley Manhattan jobs, and then they're going to Paraguay or they're going to Dubai, going 0% tax, right? And so what is he saying, and why is this relevant here? Well, they say wages haven't kept pace with inflation, but what's ultimately going to happen is a lot of these large corporations are going to say, hey, I'm paying top dollar for office square footage. I'm paying top dollar for U.S. labor because of the high cost of living. Why not just start outsourcing overseas? Reduce my cost on the actual hire, reduce my office square footage, put myself in a position to become much more profitable and agile in this uncertain economy. That's what's going to happen. So when they're talking and this doesn't even take into consideration robotics and automation, all the stuff that's probably going to be coming in the next 2 to 5 to 7 years. What's ultimately going to happen is wages are going to be coming down. So if record high debt is coming, it's already here, $16.9 trillion in record high debt, but record high payments because of increased interest rates, what's ultimately going to happen? You have increased cost with decreased salaries. It's a problem, right? It's a problem. And that's why I believe we start to pencil this in with what Blackstone just did. They raised the biggest real estate fund in the history of the world. $30.4 billion. And what did Blackstone do in 2009? They founded Invitation Homes, the largest single-family property owner in America, 90,000 houses. What are the odds that they decide to raise this fund today? I mean, they raised it last week. They know distress is coming. It's coming without a fact. And they go on to say that inflation as quantified by, that's the key word here, as quantified by the consumer price index currently stands at 6%. Now, a lot of people would say, car insurance probably up 15%, right? Home insurance is up more than that in most areas. Food prices, gas prices, everything is up 20, 30, 50%. A lot of people would argue anyway. And so this 6% sounds like a gift. But we start to look at what Janet Yellen's saying. She says slow pullback on lending could do some of the Fed's work. Yellen said on how the U.S. can bring down inflation while maintaining strong jobs, right? She talks same thing. Banks tighten lending. This is all 2 hours ago, 23 hours ago. This is all happening right now. So if they're going to tighten up lending standards, what's going to happen with getting a home equity line of credit, getting a refinance, getting access to some type of lifeline? It's going to get harder and harder and harder, pushing people to likely sell off assets, right? This is what is likely going to happen. So like she reforms that lender this year, right? So this is World Bank. This is all going to happen. Lending standards are going to tighten up, especially when we start to look at commercial real estate. You're talking 2008 style crash. Now, this is what this one, he says CEO, right? Whatever that means. Who knows if it's a high-level CEO, low-level CEO. The reality is, you look at what's going on in commercial real estate. You have record high vacancies. You have increased insurance costs, increased property taxes, decreased revenue on these buildings, and about $2 trillion in loans that need to be refinanced over the next 24 months. So you start to see that these loans, these properties are likely not going to get a refinance. And the reason for this, many of them, is because if they have decreased income and increased cost, their values of their properties are diminished, right? And so they're likely not going to have the equity. They're either going to have to pull cash to the table, bring it to the table to be able to get the loan, which a lot of these people are not going to be able to do, or they're just going to walk away, right? And that's what's likely going to happen. We're going to start to see this. Banks are going to say, whoa, we're really exposed. We have all this risk. We're losing money hand over fist on all these loans. But you look at it, 40% of all U.S. mortgages in America were taken out between 2020 and 2021 at record high home prices. So these banks are about to get absolutely hammered, especially a lot of these small regional banks. So what are they going to do? They're going to batten down the hatches. They're not going to lend money to people that they think could be risky, right? So this is why it's important to do a balance transfer now and to make sure that everything that you do, you're doing it, to get ahead and to weather an upcoming storm, because it looks like it's going to happen. They still go on to say economists turn more pessimistic on inflation. Well, obviously, I mean, these economists, half of them I don't like. Half of them I think have half a brain, but most of them, they thought that they were going to be able to tame inflation and they were going to be able to, do this big miracle. It's not going to happen. That's like, you just look at this. How do you bring down inflation? How do you bring down inflation when the cost of energy is going to rise? Think about that. This chair was transported on a truck. This shirt transported on a truck. The phone that I'm filming this on, transported in a truck. If everything for that truck gets more expensive, whether it be the parts on that truck, the gas to actually distribute the products, the ships gets more expensive, the flight to fly it over from China, all this stuff gets much, much more expensive. Who pays for it? Me and you, the consumer. And so how can increasing the cost of the debt that we have combat the cost of that? It doesn't make any sense. We're going to be stepping into a situation with record high inflation. Inflation is not going to be going down, it's going to be going up. And the cost of obtaining capital is only going to go up. It's going to get harder. And so we look at Blackstone, we look at what a lot of the savvy investors are doing. They're positioning themselves because the 99% are not aware of this. They think that Big Brother's going to come in and save the day. It's not going to happen. We're walking into a problem. What you want to do is have cash, have a game plan, have a strong source of income, be out of high interest rate consumer debt, and position yourself to weather the storm. I believe if you position yourself correctly, you're going to make an absolute fortune. So I'm not saying this to scare anybody, but if you position yourself, you're going to make an absolute fortune. And so how would you position yourself, right? This is what I think. I believe the real way to position yourself, the real definition of wealth in 2023 is options, having options. Maybe it's second passport. Maybe it is a home in another country. Maybe it's access to other currencies. Maybe it's gold and silver. Maybe it's crypto. Maybe it could be anything, right? Having options is true wealth. having options. And that changed dramatically, especially over the last few years. 4 or 5 years ago, people didn't really talk about that. True wealth in 2019, 2018 was simply, maybe a great real estate portfolio, a strong business. But real wealth in this uncertain world is options, having options, being able to move around. So if you need help fixing your credit, we'd love to help you at GreatCreditFast.com. Drop your comments below, hit the like button, subscribe here, subscribe also on my second channel. And in a future video, I'm going to break down my exact game plan, what I've already done, and what I'm going to be doing in 2023 to protect myself against this big upcoming thing that we all know is coming. So subscribe here, subscribe on my second channel, and give us a call at GreatCreditFast.com, 561-430-5900. Catch you guys later. And add me on IG later.